Hey everyone, hopefully you're having a good day. My name's Andy. My channel's Finding Value. Today we're going to go through Twitter, see what people are sharing on social media. I'll interject my financial opinions as we go through it together, generally related to three different topics: wealth building, commodities, and/or financial topics. Let's dive right in, take a look, see what's going on today. If you want to follow me at @Finance, and if you want to join our community, finding-value.com, we've got a 5 p.m. Mountain Time question and answer session happening today. If you're viewing this on Sunday, definitely sign up. We've got a coupon code special, $25 off the first month only on a monthly membership, and a $100 discount on the yearly membership with that coupon code. You can sign up, you can join the Zoom call if you'd like at 5 p.m. Mountain Time and ask me whatever you'd like. All right, scrolling down, energy headline news: gas and coal will fuel most new power demand for AI, and that's where I think the opportunity is. Gas and coal will fuel most new power demand for AI. Here it is. This is the incremental generation needed to meet data center demand. So this is CCGT on the bottom. This is coal in the middle there. And onshore wind is the blue. Utility scale PV, photovoltaics, are the yellow. And then there's some other stuff thrown in there. So coal and gas are the two that are going to be growing quite rapidly. I am positioned for this. I am positioned and have been positioning. There are still really good entry points in natural gas and coal. It's not too late. And the drilling companies are down too. They have really low rig counts for both natural gas and oil. So I think there's opportunities across the board here to play this new demand for AI. Now, there's another demand out there for natural gas. This is going to get it's going to get hit every which way. You've got natural gas for LNG terminals being built. There's a whole bunch of demand for that. Mexico, their natural gas has been declining, so we have more export to Mexico for natural gas. And then we've got this new power demand for artificial intelligence laid on top of this. This is huge. Now, one thing that I like to do is this is coal. We're talking about coal here. So this is coal. This is a chart of coal. We've got the base down here at the bottom. It's a double bottom here. We broke out here, and this is a retest. That is where I would buy, is on this retest right there. I also like pricing coal and other things. Let's try pricing it in gold just for the heck of it. So this is coal futures divided by gold futures. And then when you ever get really low, like down here, that's a pretty good time to be looking. You know, these areas down here, very, very good opportunities to be looking for coal in relationship to gold. It just means that coal is incredibly cheap. So what you're telling me, Andy, is that I can buy coal equities down here, very cheap against gold, and this is coming ahead of us. Ding, ding, ding. You win. You win a prize. The prize is the opportunity. It's natural gas. We can look at natural gas too. Let's do natural gas. I think that's what, NG1. But here's Henry Hub natural gas futures. You can see we've been in this awesome pattern here for natural gas. Let's price it against gold or something like that. So this is natural gas priced against gold, and yeah, we're cheap as we're about as cheap as you can be. You can see that line going across. It's below. Well, crap! I'm hitting my keyboard there. It's below everything. That red line going across is where the current price is at, and it's below the entire bull market of the last one. So yeah, this is a heck of an opportunity. Heck of an opportunity here to take place in this. Here's XME ETF, metals and mining compared to US oil. So what I did is I just took XME, which is the Spider S&P Metals and Mining ETF, and I just put US oil laid right on top of it. You guys notice anything? I mean, for the most part, these move together, right? We had a big disconnect in 2012 where US oil went up and XME went down. You guys see that disconnect? It's right here. The biggest disconnect was in 2014 when it was oil was here, XME was down in a bearish trend. So we had a large disconnect right here. It corrected with oil catching up very quickly to XME. Then we are pretty much in lockstep pace here, moving around. Lockstep pace in 2020, both going up directionally right. And then look at on the right hand side here. We've got XME going vertical and oil lagging behind. Could we say that this is a 2014 moment where we had this lagging behind for oil, but XME was going down? So XME led oil in 2014 to the downside. What do you think is going to happen here? Do you think that XME is leading oil to the upside? My answer is yes. I do believe that. Obviously, time will let us know how this plays out. But that's my take. I think that oil is going to have a big catch up move to the upside at some point in the future. This is the ratio, just to show you the ratio over time. We have these large disparities. One of them was 2014. There's the 2014 disparity of oil being incredibly expensive against XME, and that corrected. You can see it correct pretty quickly back to more of the average. Now we've got this anomaly on the right hand side. We're way up in no man's land where XME has massively outperformed US oil. This is like, I don't know, many standard deviations off of the average here. So this is an anomaly, and I would say that's an opportunity. That's the way that I view this opportunity here, in this market for oil. Market Sniper. And again, I was scrolling through this. Someone said, I bought this NFT in April of 2021 for $17,000. Today, it is worth $10. And Market Sniper says, congratulations on your stupidity. Now remember to repeat the cycle, only a larger, longer one, and buy Bitcoin. On the basis it is digital gold, in the same way that you thought that was digital art. Well, I was still amazed that it was worth $10. I mean, that's where I'm at. So I read this, I'm like, who the heck would pay $17,000 for a picture that I can just do right click, probably save as, right? Who would pay $10 for this crap? I mean, that's still stupid. I mean, I mean, think about that. I wouldn't even pay a penny for it. I wouldn't even waste my time on it, in all honesty. But I do, if you look around, Market Sniper's just absolutely dogging on everybody in crypto. It's so funny. He's just dogging on crypto. He's dogging on these digital NFTs. I don't understand them, guys. I don't understand it. I don't know why anybody would pay any money for this picture. I like a you can just do right click save. You can, you know, take a screenshot. I mean, I don't understand it. It doesn't make sense to me. So Henrik Zaberg, um, a while back when gold was like $1,800 an ounce or something, he was calling for like $800 or $900 if I can remember right. He goes, this guy gets it wrong every time. He's a legend. Gold and silver, the whole narrative will now be reversed. Watch. He is so wrong, it he is so wrong, like Harry Dent, that you'd think they just stopped making predictions. The prediction camp, it's not right, and that's why I don't try. I don't try to make predictions. I mean, I might say, well, my prediction or my opinion is. but I don't really put much behind it. Buy stuff when it's cheap and then hold. And that's really all you have. But I was just reading this. Henrik's been in the market for a while. He's had a lot of he is consistently bad. He's not as bad as Kramer, but he's missed the mark on a lot of the stuff that at least I follow. I follow the gold and silver market, so I don't really follow any of his other calls. Not that it really matters, but I just saw this. But yeah, he gets it wrong a lot of the time. All right, I thought this was funny as heck. All right, so I was scrolling through. I read Scottie Pippen. Now this was up beginning of the scroll. So beginning of the scroll, Scottie Pippen says Bitcoin, it's just the beginning. And I keep scrolling down, 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 down. I had to go through quite a few posts as I try to share these, right? And then Great Marty says of the end. I was like, oh, dude, that is epic. that is so epic. Bitcoin, it's just the beginning of the end. I, I love it, guys. I love the back and forth on Twitter of all these. I mean, let's be serious, guys. I take all my financial advice from Scottie Pippen. I really do. And since he's saying Bitcoin is just the beginning, then yeah, I definitely have to buy Bitcoin now that Scottie Pippen is all about Bitcoin. I thought it was funny. Great Marty is pretty much a bear on everything, so he's a bear. Pippen, I'm sure, is a bull on maybe not everything, but at least on that. SD Bullion, we've got the trolls coming out. I wanted to talk about this too. It says in this post, why then did gold and silver crash so hard then? And SD Bullion responds, record high weekly close is now a crash. Okay. You don't want to be doing this, guys. Not SD Bullion, but you don't want to be taking like one day and being like, oh, well, why did it crash so hard in the one day that it went down or 2 days? It's like, dude, it's one day. Like, one day does not make a trend. If I were to say, I'll put it this way, short term market movements do not dictate a long term trend. So we could be trending higher, like gold and silver are in long term uptrends right now, specifically gold. Silver is establishing it. And then like we have one down day, and they're like, well, why then did gold and silver crash so hard then? That's like telling me that you know nothing about the markets. I mean that's what it's revealing to me when I read that. It's like, why then did gold and silver crash so hard then? It's like, okay, this guy has no idea what he's talking about. And that's kind of what I when I read that, it's like, oh my God, like I mean, do people not understand like trends? Do they not understand there's a longer term trend, a medium term trend, and a short term trend? And that you could be simultaneously bullish on the long term but bearish in the short term. So you could be both bullish and bearish but on different time frames. Just because an asset goes down one day does not mean that the trend has reversed. Doesn't mean it could mean nothing. Maybe it does mean that it reversed, but we'd have to see follow through. So I really don't like when people ask like these really, really short term or they make short term statements on a long term trend. So I think that's something that you have to separate those as an investor. You separate the short term market movements, and then you've got the long term trend. The trends are dictated by maybe it's an upward sloping trend line. So you're in a big uptrend. You've got this upward sloping trend line that we are continuing to stay above. That's good. Maybe it's a pattern that you get bullish on. Inverted shoulder head shoulder, double bottom pattern. Maybe it's a flag pattern that's consolidating on top of a double bottom. And that's what drives your opinion on the intermediate to long term. One day that goes down a lot that's still above support, it doesn't mean much of anything. Could it be a reversal? Anything could happen. Anything could happen. But if the long term trend's intact, then I wouldn't worry about it. It's one day. Ben Lukoc, it says head of oil at Trafigura. For the last 12 months, we've all known that there's this surplus that's coming. I think it's really is just about here now. And this is oil at sea. The amount of oil in tankers has risen to the highest since 2020. And this is what they've got here for uh, billions of barrels on tankers. Now, is this going to come? It could. We'll see it in inventories if we get bills. So let's see it. Could this occur in 2025, maybe into first quarter of 2026? That's kind of what I think people are expecting and what's kind of baked into the cake. If it's baked into the cake and we don't see as much oil, then we go higher. If we see a lot more oil than what's expected, which a lot of people are expecting this glut, then I would say, yeah, it could go down, but I don't think that's going to happen. I think that the risk reward's pretty decent here for fourth quarter of 2025 to be looking and shopping around to get companies on the watch list for bottoms. If capital rotates out of gold and silver, the real question isn't why. It's where that money shows up next. And that's where I think gold got a lot of money. I think it's going to show up here in oil. Remember this disconnect here? I think oil is going to go up. The inflation sensitive assets, I think, go up next, like the iron ores, the coppers, oil. Now, it may occur 6 months from now, though. May occur 1 year from now. And that's really what we're kind of waiting on. A lot of people like to tell you that they know the path. They're like, oh, this is what's gonna come next. No, they don't. They don't know that. They don't know that with 100% certainty. Now we can make best guesses. We can see that money is buying oil companies because they have bottoming patterns and they've pulled back a little bit, probably to do a right hand shoulder of an inverted shoulder head shoulder pattern. We can buy it, but we don't know for sure the exact timing of it. But we just wait because we're buying something that is 7 standard deviations on the cheap side for oil to gold ratio. I'll take that bet all day. All it is you get a what it is, you get a bell curve. And right now, if this is cheap on this end and this is expensive, so this is expensive on this end here, we are like way out here in terms of pricing of crude oil. So what makes you think that we're not going to come back this way? And this is the average here, where the majority of the time it spends it in the middle. We can buy it off the curve, 7 standard deviations. So it's if this is a standard deviation, 1, 2, 3, 4, 5, 6, 7, right? So we're at 7 out here. We're all the way out there. Yeah, crazy is what I say. Get that all out of there. I see many. This is the gold top posts. Gold is not topping out. The fiat Ponzi system is. The fiat Ponzi system. And again, I revert back to the cycle. Money rotates into gold under certain market conditions, and those conditions are all present. Increasing inflation, higher interest rates, and even if we have a short-term pullback in interest rates, I think it's just going to be a short-term pullback. That's it. I think the trend is up. Short term, yeah, we could get, that's being bullish on interest rates going up, and then being bearish in the short term. That's one of those instances that you could have two competing or two opposing um, opinions on different time frames. Mike Alfred said, sold all my gold today, all my GLD, gold bars, and jewelry, all of it. And I used the proceeds to buy more Bitcoin at 106,000. Let's see how this turns out over the next few months. Really, you swapped everything for a few month play? I don't know if I'd do that. Never go all in on one asset class. That's where you can get That's where you can lose a lot. It's concentration. You can win a lot, but you can also lose a lot if you hyper concentrate on something. So I'm pretty conservative when it comes to that. I don't like putting all my eggs in one basket. I like having spread out across multiple sectors, smooth out the volatility a little bit at least, and then ride it. I feel better at night. The VanEck Natural Resource ETF is breaking out to new all-time highs. This is what he's got on this chart from 21 to 26. So I wanted to see what this actually looked like because you don't really see too much here. We're kind of zoomed in on the intermediate cycle. So it's HAP, VanEck Natural Resource. That's what I see there. So what this is you have a three hump consolidation. So it consolidated here. Sorry, I actually drew that wrong. That's two. One is over here. So it's one, two, and then three. That could be the three hump consolidation. We have that nice, good entry point in 2020. That was like the buy of a lifetime there. It wasn't too bad down here too. In 99, it probably came all the way up like that. So that looks good too. So this is your consolidation. This is out of cycle here. This is out of cycle. This is now in cycle. This is a flag pattern, and we've broken to the upside. It looks absolutely fantastic. He was only showing this portion of it from like 2021 onward. But I like this view way better. It shows me a little bit more about the background. So I think maybe we do something like this. We take this here, we put that up like this, maybe. Maybe we go to like $80 on it. It's possible we could also do something like that, $87. So somewhere up here is probably where we're going to end up, would be my guess. Something like that. So it does look good. And then the top holdings, Exxon, Deere, Chevron, NextEra Energy, and Iberdrola. Iberdrola, I guess. Yeah. Anthony says the best investors in the world are really good at doing nothing for long periods of time. 100% agree with that. Here's Nick. Everyone says that they will invest when there's blood in the street, but few actually do. Being contrarian is way harder than it looks. It's a lot easier for me now because I know where to buy. I know what patterns to look for. This is actually a decent pattern if you draw a falling wedge on it. Those are good patterns to buy. The pattern. If you don't know what the patterns look like, if you don't know any of that, then yeah, it's hard as heck because you're basically flying blind. And flying blind, you don't know what to buy. You don't know what to look at. You have no idea. And I was like that too when I first started investing. I didn't know what I was doing. You're flying blind in terms of valuations, sectors, ratios, none of that stuff. I had nothing. No wonder nobody can make any money. You don't know what the hell you're doing, and that's the risk. The risk is in not knowing what you're doing. It's a quote from Warren Buffett. You want to know? North Star, since they peaked 25 years ago, gold has significantly outperformed stock market indices. The ratio charts for stock markets versus gold are breaking down once more, signaling a high probability that will continue for another 10 years. And that's that S&P 500 chopping sideways. That's what that is. This is for another 10 years. First, you get a slowdown of momentum in the S&P and Dow. Then you get gold breaking out against it because that momentum slows down. And now I think we're at the beginning of, quote, that capital rotation he's got on the upper right. We're in the beginning of that. So commodities, precious metals, they're all starting to outperform. And we've got our picks. Some of the companies are still in certain sectors are still at like bottom of bottoms. Like they are just blowing out. And those are where the biggest returns are possible in the market. There are sectors that people aren't looking at right now that I think, oh man, they could be very explosive in the future. If you bought the S&P 500 at 23 times earnings or more, in every case, your annualized returns over the next 10 years was between 2% and minus 2%. Heard Howard Marks say the above, which is very interesting. So again, that is based off of valuation. So if you buy the S&P 500 overvalued at 23 times earnings or more, over the next 10 years annualized, you get between 2 and minus 2% returns annualized every year. That is absolutely dog crap. Why would I put any money into that? But that's also, you're buying at the top of the market. But you don't want to be there. You avoid overvaluation, you buy undervaluation. It keeps you in the bottom of the market if you're buying undervaluation, and it keeps you away from overvaluation with these crappy returns. That's the whole whole part of this, guys. That's what you want to do. Here's a quick snapshot on the oil market. OPEC plus crude exports are down month to date in October. Global oil demand is around 107 million barrels per day. High frequency global oil inventories continue to build. Global onshore crude storage is flat to down. So where's all this oil at then? So crude exports are down from September. Demand nowcaster reported and estimates. This is our estimates here. That's looking at demand. We've got reported JPM global implied. They're saying that we're going to get builds in oil inventories. And then global onshore crude inventories, we're not really seeing the builds here. Not saying it's not coming, but we're just not seeing it yet. And we'll continue to monitor it here. Josh Young, air travel activity is soaring to new all-time highs. Good for jet fuel demand. U.S. air travel. We've got TSA total traveler throughput in million passengers, 7-day average. The 7-day average is 10.7% above 2019 levels. That's a pretty big gap there. We have a lot more travelers coming up here this fall. So that's looking pretty solid for demand there. That's all I've got for today, guys, because that's where we're going to end it. Give me a thumb up for the content, subscribe to the channel, subscribe to the website, especially with the coupon code, and we got that Sunday question and answer session coming up at 5 p.m. Mountain Time today. All right, guys, that's all I've got for today. So we'll catch you next time. See ya.